this day and time, we always want to. You always want to make sure you ask who's the custodian. In our case, that's an easy answer. Our back office, LPL Financial, but ideally, your financial advisor has hired an independent custodian, and such as ourselves, such as a brokerage, or in that place, the custodian is where the assets are held, where the money's held.
Right.
And it's totally separate of the advisor you're working with and their firm, and even their back office. It's held in trust. Inside of that, the account's held at the custodian, and the only reason the account should go up or down is because of the investments inside of it.
That's right.
And that, I mean, I've got my notes here, but rather than acting as their own custodian, and there was one very popular person who served as their own custodian, and that was Bernie Madoff, the notorious financial advisor who defrauded clients in a multi-billion-dollar Ponzi scheme. But he was serving as his own custodian, not using an independent custodian, and so the custodian provides an important safety check.
Yeah, and that's where the accounting for your debits and credits and that kind of thing take place. As you make money, it helps. That's where you are able to, through math, find your performance, and if you don't have that, and they're under a whole nother level of scrutiny, outside of what the financial advisor is, from several organizations. And if you don't have that in place, that means somebody is, in their back corner office, doing their own math for you. And, that's where people have ran into problems. Right. Bernie's not the only person that there's been hundreds and hundreds of people. So do some background check, ask some questions, get some documentation.
Make sure you can go online.
Right.
And have the ability to go online and check your account's performance. If they're reputable, they're going to have online access, so you can go online any minute and double check.
99% of the guys like us that are out there are doing it the right way, and the custodians are reputable. Now, there are some custodians that are better than others, and through trial and error and asking people. But at the end of the day, most of the reputable custodians out there do it the right way.
Exactly.
It's just a matter of whether their features fit what the advisor and the client need.
Yeah, and from the client standpoint, you got to just ask that question.
Right.
It's not knowing all the details necessarily, just
right.
making sure it's a reputable one. Now, the kind of last question we'll cover today is one that we don't necessarily need to get in the weeds about, and that's as that advisor you're interviewing, are they gonna consider taxes and tax implications? Once again, we're not a CPA, but we feel it's extremely important that we feel by having a knowledge of tax code and the ramifications of certain moves, you're able to head off some tax implications
right.
out there. It's very important to be knowledgeable about that.
For sure, and you're not, when you say that, people think, well, maybe Ryan's got an offshore account or something. Yeah. He can hide my money from being taxed in. That's not the case. You want to use the tax code to the full benefit for yourself. So pay all the taxes that are due for you, right. but don't pay more than you have to, right?
Such things as offsetting gains with any losses you may have
right.
in the account for those accounts that are not retirement accounts, non-qualified assets. Mm-hmm. Make sure that an advisor is just not going in and blindly selling.
Right.
Are they putting the right types of investments in the right types of accounts? Are you going to have a tax efficient drawdown strategy once you have to tap into your funds in retirement? All right. those are things to consider.
Right.
And if they're not at least considering that, then that should be a potential red flag.
And if you have investments and are decide to move to a new advisor, you need to ask what their plan is for avoiding taxes as that account moves over. Sometimes there aren't taxes, but sometimes we've seen some horror stories where people have had nice gains and just reinvested the whole thing because that's what the advisor liked to do, and there wasn't much thought put to the taxes, and it turned out to be a big bill for them. The other thing is, think about the long-term benefit or cost tax wise to the investment you're making. You know, there's certain vehicles out there that do a really good job of kind of having a tax sheltered vehicle where the taxes are delayed until you withdraw money out of the account, but they're really high taxes at that point.
Right.
Not necessarily a bad vehicle, but it could be bad for the wrong situation.
Right, exactly.
You know,
Exactly.
so yeah, if the advisor does not at least bring up, and not everybody needs very high level tax work, but if the advisor is not talking about why that's important in your relationship, then, you know, make sure that that's not something you need. I'm not saying that you do, but it should at least be considered. And in fact, you know, most people we ask to see their recent tax return, and we can quickly review that. And we're not telling them how to do their taxes, but we can tell if they're taking full advantage with their investments for the tax code to be, you know, in their favor. Making the most of it.
So yeah, we pride ourselves in staying up to speed on that. Any tax law changes, there's certainly going to be some to come here as we film this and throughout the rest of the year.
That's right. They're changing all the time. So you know, you need to work closely with your advisors and your accountant or your CPAs and make sure that they're up to date and you're up to date on that.